This is Millennial Money Mindset. Dangers of debt. We are drowning in debt as a nation, and this is impacting our mental health, our well-being, and creating stress and worry, anxiety, which reducing your debt will resolve. And this is what we're talking about today. This is potentially the most important video you'll watch. So stay right to the end, because we're going to give you practical tips right at the end. We're going to tell you why we are drowning in debt as a nation, and we're going to tell you what debts are, good debt, bad debt. We're going to cover it all in this video. So stay right ahead, stay right in your seat, strap right in, and we're going to get right into it. So debt creates stress, anxiety, and reduces our well-being. Debt is a danger to yourself, your family, and your financial independence. So as a nation, we are suffering from debt. We are in chronic debt levels that we've never seen before. Interest rates are rising. We are paying back more debt interest than ever before, and it's a national crisis. And it's not our fault there. We're going to go into the reasons why credit card debt is so high, the reasons that advertisers prey on people spending and buying stuff they don't necessarily need. Credit card companies are making billions of pounds out of your misery, and we're going to try and reduce this stress and worry and anxiety in this video. So stay right ahead. So if you want more money in your pocket, more time in your day, and more happiness in your life, this is the place to be. This is Millennial Money Mindset. If you want the fruits, you need the roots. Please subscribe, please like, and please tell a friend, because we aim to put money in your pocket, time your day, and happiness in your life. So if you want to improve saving, spending, and investing, then subscribe to this channel, because that's exactly what we do. So we have so much debt as a nation. So the average debt is, we have £15,385 average household debt as a nation, and that's not including our mortgage. And this debt means that we're having less savings, less investing, and we're further away from financial independence and retiring early. This is a burden on us. This debt is a burden, and it means that we can't focus on saving, and it means we can't focus on investing, and it means that we can't be independent. We can't be financially independent, which is the aim of this channel. So the aim of this channel is to get you financially independent, retiring early, or financially independent and seeking happiness. So FIRE is financial independence, retire early, or what I talk about in my book, Millennial Money Mindset, if you want the fruits, you need the roots, is financially independent and seeking happiness. So we talk a lot about in the book, Millennial Money Mindset. I wrote this in 2018, 2017, and I got halfway through the book and actually realized that actually the point of life is happiness. It's not necessarily about to accumulate more money. It's not necessarily about accumulating more stuff. It's about actually having happiness, and this is more time with your friends, more time with your family, or having more me time to do more things in your day. You can choose to go to work rather than actually having to go to work as a necessity to pay those bills, to pay off that credit card debt, to essentially put food on the table. If you get to a point in your life where you have enough assets that are paying you an income, so you don't need to work anymore, or work is optional, then this is the game. This is the aim of the game. Previous generations called this retirement, and today retirement, or having financial independence, seems further away than ever before for many people. And I totally understand that. I speak to so many people out on the streets. I speak to people wherever I go about improving people's finances, improving people's financial education, and improving financial literacy. So actually understand how this system works and how you at home can beat the system, because it's working against you. These credit card companies, and we're going to go into this today, are making billions of pounds on your misery. They're making billions of pounds on you getting into debt and having to pay that debt back. Credit card companies are literally making billions of pounds. And if you can avoid this debt, then that's a secret of financial independence. I remember being at university. It was around year 2000. So I'm maybe older than many people watching this video, but I remember as I started, I went to the freshers week. I was already taking out a student loan. I had dipped into my overdraft, and there was a row of people trying to sell you credit cards. It was like running the gauntlet, as in Gladiators, if you remember that, like you having to kind of dive and get out of the way of these people who are come up with really clever schemes. They say, like, look, 0% interest-free credit. They'll give you loads of free gifts. They'll give you loads of free stuff that's going to tempt you and entice you to take out credit cards. And they have kind of beautiful people selling you this to do. Remember, there's very attractive people selling you credit cards. You just have to sign this one fee, sign this piece of paper, then you'll get hooked on this credit card debt, which is encouraging you to essentially spend money buying stuff you don't need to get you further and further in debt. It's kind of it questions a lot of ethics and morals and behavior, but this is the world we live in. This is the capitalist system that we wake up into today. And if you can avoid this credit card debt, then you're one step ahead of everyone else who falls into this trap. This is a pitfall that many people fall into, and it's the biggest trap that I feel people suffer from today. The shiny lights of advertisers, the shiny lights of credit cards, companies giving away points and freebies and free money, essentially, to encourage you to get into this kind of the hooked and the addiction to debt that I see so many people are suffering with today. And they are suffering. It's money worries tops a pole as the biggest cause of stress and worry. We're further away from retirement. It seems like a distant dream to many people that I speak to today. And this is because it falls down to the dangers of debt and not understanding debt. And there's so many companies that want to make money from your misery. And this channel is here to help you to reduce this stress and worry, this anxiety, and to improve your financial well-being. So stay right here. You're in the right place. Please like, please subscribe, please tell a friend. Please forward this to someone if they would benefit from reducing the stress of debt. So let's get into the figures. Let's get into the figures. I did some research before this, before I started filming, and it's kind of scary how much of credit card debt we're into. So the UK as a nation have 70 billion pounds, 70 billion with a B, of credit card debt. And the average UK credit card is charging 30.4% interest rate. So they call it APR. So interest rate. So, and we're going to drive down into these numbers in a bit, but let's understand what these figures mean. So 70 billions of pounds, this means this is just credit card debt. You need to pay that back plus interest. So not just the 70 billion pounds, but you need to pay back that 70 billion pounds plus 30.4% interest rates. And the interest rates has risen. The amount you have to pay back has increased since interest rates have risen last year. So it used to be, the average credit card used to be 26.2%, according to Money Facts, but that's risen to 30.4%, the average credit card. And I saw an advert the other day charging 70% of an inch on a credit card. And that means, if we're going to break down this just in a moment, but yeah, this is crazy how much these credit card companies are enticing you to take out more money. And it's much easier to take on debt. I totally understand it. It's much easier to borrow £1,000 than to go out and work for £1,000. It's much easier to take that money initially. It's the instant gratification versus the long-term gains. So if you can avoid this trap, then you're winning. Then you're on step to your financial independence. You're going to have so much better financial well-being. You're going to reduce that anxiety, reduce that stress and worry. So do you have the pain of credit card, that maybe the letter you have that kind of pain that's in your stomach, where that letter the credit card company falls on the mat? Do you potentially want to escape the rat race, the 9 to 5? Maybe you don't want to work at your job for 9 to 5. You don't want to that commute 5 days a week. If you want to get out of this rat race, then becoming financially independent is the key, and avoiding debt is the pitfall to not fall into. So most people can't afford these the repayments, not including the interest rates, the debt. So let's go into it. So imagine you have an average credit card. You borrow £1,000. So you go to a credit card company, they lend you £1,000 at the average credit card interest rate, which at the moment is 30.4%. So after 1 year, you'll have to pay back that £1,000 plus interest, which is £304. So the total from that £1,000 that you borrow, you will have to pay back £1,304. That's after the first year, and it gets even scarier after year 5 and year 10, which we'll go into now. So year 5, you borrow £1,000, you'll have to pay back £916 in interest rates. So you borrow £1,000, you have to pay back £1,916 after year 5. After year 10, you pay back you borrow £1,000, you have to pay back £3,317. So in interest plus the £1,000 initially, so you have to pay back £4,317. And that's just from £1,000. That's crazy. That's almost over 4 times you have to pay back because of the interest. So you have to understand compound interest. So if you flip that over, and rather than paying interest rates, you get, say, imagine you put money into the stock market and you get those interest rates. That's the benefit of investing rather than the downside of actually taking out a credit card debt. So it's not your fault. So advertisers encourage you to buy stuff that you don't need. So we're bombarded by advertisers. There was research that I did in my book, Millennial Money Mindset. If you want the fruits, you need the roots, which was shortlisted by the Financial Times. And we're bombarded by adverts, 1,000 adverts a day that we see driving around on our answering our emails that we get subscribed to, or just on our pop-ups if we're searching Google, there's adverts popping up. If we watch TV, there's adverts all around us. If you go to even just watch your football game, you go to watch a Premier League game, and there's adverts, banners all around it. And it's for all the bad stuff. It's all the bad stuff that is in trying to encourage you to spend more. So credit card companies get rich from this. So let's work out how much credit cards are making from your misery. So I did a study, I did some research before this video. So Visa, just a normal Visa credit card, they made in 2022 £29.3 billion on profits. That's just profits. That's not just revenue. So they made £29.3 billion in profits, and they've made that from you borrowing money and paying back in interest rates. So MasterCard made £22 billion in 2022, and American Express made £55.5 billion in profits from you paying back that interest rate. So credit card companies are making money from your misery. Credit card companies are becoming rich and not you. So the aim of the game is to not get into this debt, because I see people get into this debt spiral. So once you get with that example we made, you've got to pay back £4,000 from that £1,000 that you borrowed. And then how do you pay that back? It just gets into a downward spiral, and it creates more and more misery and more pain and more anxiety. So the aim is to try and avoid as much credit card debt as you want. I don't have a credit card. I pay everything off from my savings account, and I have an emergency fund that I pay from. So I don't pay back interest rates to credit card companies. I make money from interest rates on my bank. It used to be tiny, how we had a decade of low interest rates, but now interest rates have risen. You can make money on your bank account again, which is great news. And we have to understand compound interest. And so compound interest is the interest on your interest. So that worked example that we use, credit card companies make loads of money because they understand compound interest, and they make money because they understand compound interest, and they have compound interest working for them. So Albert Einstein said compound interest is the eighth wonder of the world. It's the most powerful mathematical force in the universe. And he understood this, and credit card companies understand that, and they make money from compound interest on you becoming. So if you have the choice to make compound interest work for you or make compound interest work against you. And in this video, my aim is to help you make compound interest work for you. So let's talk about good debt and bad debt. So we have good debt and bad debt. So good debt. So debt isn't inherently wrong. I'm not saying debt isn't inherently wrong. You're just borrowing money. So just think, you might need £20 from your mate down the pub, and he lends you that £20, and then you pay it back. He probably won't pay you interest on that. And that's all it is, that you're borrowing money. And the thing is, the more in need you are to borrow money, the higher the rates are. Interest rates rise depending on the urgency you need. So if you're in desperate need for that money, there's payday lenders who will lend crazy amounts of money to you, and you'll get into these debt spirals. If you don't need to lend money, if you don't need to borrow money, then you're in a good place. You're much more likely to get better deals. If you do borrow, you're much likely to get a much better deal borrowing money. And the best thing is, if you're not borrowing money, you're lending money. So you can, this channel is called Millennial Money Mindset. If you can flip the mindset to become an owner rather a consumer, and that is the key to financial independence. So if you can think differently, if you can think as an owner rather than think of yourself as a consumer, think of yourself as a producer rather than a consumer, this is where the rich think. They think differently. This is where wealthy people think differently. This is where you as an individual need to think differently. So if you can lend money to people and they pay you interest, this is where you're going to get compound interest working for you, rather than if you're borrowing money and you're paying compound interest, and after 10 years you're paying 4 times as much as the initial capital that you borrowed if you're borrowing money. So this is key to understand. So good debt and bad debt. So good debt is something that you invest in and it's going to grow over time, or it's an asset that's going to increase over time. This could be a mortgage. You borrow money, you buy a house, and that house increases over time. This could be a family house. This could be a buy-to-let mortgage, and you borrow money. You perhaps do up the place, you paint it, you put a new kitchen in, a new bathroom, and it improves over time. And that money that you borrowed has increased. You rent out that buy-to-let property, and in 10 years' time, that debt is repaid, and now you're essentially getting free money because you've paid off that debt. That buy-to-let property is owned outright, and every month the tenant pays you money, and that's good debt. Another example of good debt is if you go to university, if you want to be a doctor, an architect, a teacher, perhaps you need a degree in order to do that job. You need to have that qualifications. So you go to university, you take out a student loan. That doesn't need to be paid back until you earn a certain amount. You don't need to pay that back initially. You pay that back over a number of years. You don't have to, and you get a lower rate than the payday lenders, or you get a lower rate than the credit card companies. And you're improving your skills. You become qualified. You're going to have a higher earning. You're going to earn more because of you invested in yourself. That's good debt. So potentially another part of good debt would be you borrow money in a business that's generating cash flow already. Those are 3 examples I use as good debt. So buying a house that's going to go up in value, investing in yourself, like student loan and you're going to get a degree that's in demand, and 3, you're borrowing money to invest into a business that's generating cash flow already, a successful business already. They're the 3 examples of cash flow, of good debt. Bad debt is something that you borrow money and you buy that's going to go down in value. So any consumer goods. So if you buy a pair of shoes, for instance, you wear that every day, you wear that those shoes are getting less valuable because you buy them. No one's going to pay the same amount as in the shop because they're used, they're worn. You're not going to get the same value back. This could be a new car, perhaps. I see people buying new cars, especially they borrow money to buy loans. Every month they have to pay back £400 to buy that new Tesla, where they could have saved up and bought, a Ford Focus that's not as glamorous, not as sexy, not as this high status as a Tesla, for instance. But over the long term, you're not paying back £400 a month that you could be using £400 to invest into the stock market. You can invest into save up to buy a house. You could put that into a bank and you get high interest rates, and it's going to cover you for any emergency. So bad debt is essentially you're borrowing money. That thing that you buy is going to go down in value. It's called a liability. So essentially the question you need to ask is, does borrowing money, does it put money into my pocket like an asset, or does it take money out of my pocket like a liability? So that's a key question you need to ask. So then we've gone through the why, we've gone through the what, and we're going to go through essentially step by step how you can reduce your debt or how you can avoid this. So stay right to the end because this is going to be super impactful. So let's just go into the how. So how can you avoid this credit card debt? So first of all, if you find yourself in debt, so assess your debt, work out how much do you owe, make a list, how much in 2 columns, make how big is the debt, how much you need to pay back, and how much is the credit card, or how much is the interest rate that you need to pay back. And there's 2 different ways to think about this. You can pay back the high rate debt, which is essentially, I think the best thing to do is look at essentially how much the interest rates do I need to pay back, and then focus on that, focus on the high level debt, or focus on how much you need to pay. If there's a giant debt that you need to pay back, focusing on that is going to be more impactful than the smaller debts. There's 2 analogies that people use. Dave Ramsey used these. So the snowball method and the avalanche method. So the snowball method of debt is starting off with the smallest debt that you can and building up. So think of it like a snowball in the snow, and you roll and push it up, push that snowball, and it builds up over time. You start off with the lowest debt payable, and you build up over time. And this is a psychological trick that makes it easier because you're aiming at the easiest target, the smallest debt. This could be £10 that you need to pay back to your friend, or this could be £50 paid back to your on your credit card. And then this essentially gets the ball rolling. So it starts building out and builds momentum. So we've talked about Newton's 3 laws of momentum. So inertia, momentum, and every action has an equal opposite reaction. So this is thinking about, just getting started, get that inertia bit pushed, and then it builds up momentum. And then every action, every tiny payment, even if it's a small £10, every action creates an equal and opposite reaction. So that builds up over time. So that's the snowball method. And the second is the avalanche method. And essentially you flip it around. So you focus on the highest debt first. And this is, I think, the best method because mathematically it's the best method. You focus on the highest debt that you can. You focus on the highest interest rates payments that you can, and you go full onto that. But the downside of this, it feels like it's much harder. It feels like an avalanche. It can feel quite overwhelming to focus on the highest debt first, because it feels like you're not making much impact, and it feels like it's going to take much longer. But this is important because mathematically you're going to get there quicker. So the snowball method and the avalanche method, and that's Dave Ramsey came up with those 2 theories. So then the next, so number one, assess your debt. It's easy to ignore. It's not going away. You've got to focus on it. You've got to be brave. You've got to be confident. You've got to have courage to focus on this debt rather than putting your head in the sand and ignoring those letters that are landing on your mind or on your map. Your mind is going to be clear after you're going to have so much better mindset. You're going to have so much less anxiety when you start doing this. You're going to feel so much better. Get that finished feeling, as I say. So number two is areas where you can reduce spending. What are you spending on at the moment? Cut back on those things that you don't need to spend on. Are you buying luxuries? Are you going out and eating out for lunches and meals rather than you could actually bring a packed lunch? You could go to Sainsbury's in your lunch break and buy a banana and a bread roll, which is what I do actually. I don't go out. I try my best not to go out. I try not to go out for expensive lunches if I'm ever in London or in Oxford. I try my best to go to Sainsbury's and buy what I call an entrepreneur's lunch, where it's like your banana and a bread roll, which costs 72p. And, you know, it's not glamorous. It's not sexy. It's not going to raise your status, but it's going to get you to the end goal of financial independence. And that's that freedom you feel is worth every bite. It's not going to taste as tasty, but that feeling you'll get when you start making effort and impact and momentum on the journey of financial independence is going to be worth it. So that's number two. Check your direct debits. What are you spending on? Can you reduce? Are you spending money on gym memberships that you're not using? Can you go to run in the park instead? This might sound difficult. It might sound hard, but once you start making momentum, it's going to really impact your finances. And so that's number two. So look at reducing your spending. Go through your bank statement with a fine tooth comb. You have to look at the detail. This is the hard stuff, but the hard road turns easy and the easy road turns hard. So number three, understand compound interest. So we talked a lot about compound interest in this video and other videos, but it's super important to understand. And we use that worked example of the credit card with you starting off with £1,000 and using the average credit card rate of 30.4% in the UK. After 10 years, that £1,000 is going to grow to £4,317. And that's the power of compound interest. And if you're using credit cards, you're fighting against compound interest. And it's a fight you're not going to win. Use compound interest in your favor. If you have compound interest on your team, it's like a wind behind you, pushing you along as you're cycling along this road to financial independence. It's going to make it so much easier than the headwind that you're trying to fight against. And yeah, use compound interest in your favor. Understand it. Go to compound interest calculator and put in how much it's going to cost you in that credit card debt. Work out how much to incentivize you. Work out how much compound interest can work for you if you put money into the stock market. At average stock market returns is 7-8%, not even including dividends reinvested, which is a share of the profits. And that means compound interest is going to work for you. That snowball, as we use the example, is going to get bigger and bigger and bigger using that compound interest. And at the end of 10 years, what do you want? Do you want that giant snowball of debt, or do you want that giant snowball of assets that are going to pay you an income so you don't need to work? That's the question that you need to ask yourself when you're fighting the tiny fight that you're fighting, looking through your credit card bill, trying to reduce your debt, trying to reduce how much you're spending, trying to reduce that stress and worry in your life. So number four is pick either the snowball method or the avalanche method. So we talked before about the different methods. Snowball method is just getting started. It feels more psychologically like you're making progress, whereas the avalanche method is mathematically better because you're fighting that big debt first, but it's quite scary initially. So number five is increase repayments. If you can pay back more debt. So how you might be saying, Neil, how I'm at my limit each month, how am I paying back my debt? So look at your job, ask for a pay rise. Inflation is at over 10% at the moment. Go to your boss and say, want a pay rise, track track all the good things you're doing at work. So track money you've made for the company, track feedback you've received from customers, track tasks that you've done for your boss that you've done well, and keep it in a spreadsheet, and then use this as evidence. You need to have evidence when you go to your performance review. I worked in corporate world. I worked for Shell Trading for over 10 years, and I learned the hard way that you need to have evidence of a job well done. You're going to get looked over otherwise. You're not going to your boss can't take you seriously. You need evidence. You need hard facts, you need hard numbers. So keep this in a spreadsheet and take this to your performance review, or just send this to your boss and on a whim say, look, I've made this amount of money for my company. I made £940,000 in a day in my company, and I let my boss know every time. I made millions of pounds for my company trading. And I made sure that I tracked every penny that I made. I made sure that my boss knew how much I was making, and I was making more than my colleagues. I made on my trading, and I made sure that my boss knew how much I was making, and I used this as evidence for my performance review and to get a pay rise. So, or even push up, you could be on a job band and you could get pushed up a job band. Understand how much ask a HR department, the band. Sometimes you might be a low band and you might be pushed, room to increase your money into your pocket, or try and get promotion. There are sometimes, if you're in a corporate world, there's you can set up job alerts that come into your email. You might be missing jobs that would be perfect for you. Don't think that your boss is your friend. They're there. They're doing their own job. They're there having their own worries. You've got to take ownership of yourself and look for your own promotions. Look for your own increases in wealth. Look for your own opportunities. So that's increase payments. So this, maybe take on a side hustle, maybe take on start another job on the weekends, do something you love. I used to be a football referee, and I got paid not much, but it was like £20 an hour, something that was more than I was getting that you do a normal like side hustle job. And I enjoyed it. It didn't seem like work to me, and it added to my, at the end of the month, I look at my income and it increased. And so finally, number 5, don't take on any more debt. You can't beat debt by getting into more debt. Don't try and take on more credit cards. There are real good charities out there. Step change. You can consolidate some of your debt. You can try and write it off. I haven't looked too much into this, but if I was real into debt, I would look if I can write off any of this debt. So maybe you've been missold this debt to you, that you shouldn't have taken on this debt. Maybe because of coronavirus, you could call force majeure, which means an act of God, I think, in Latin. But if you understand, I studied law, and basically, if you wanted to breach a contract, a lot of contracts were breached because of force majeure, which means an act of God, which means that it's not your fault, and you might have to, you could say like the pandemic might have been an act of God and a force majeure, and it means that the payments you took, or the credit card debt you signed up for that time, isn't valid. You can write it off. Think outside the box. Think logically. I'm not saying this might work all the time, but I'm just saying, look, I would approach your debt as one of the biggest challenges you need to face. Once you have that debt burden lifted away from you, it's going to give you so much peace of mind. It's going to give you so much comfort, and so much it's going to reduce your stress massively. So let's summarize. So hopefully this has been the most important video you've seen. This is going to save you thousands of pounds not getting into credit card debt if you do these steps. So we want to put money in your pocket. You're going to save time. You're going to save time of not having to pay back that credit card debt. If you've taken a £1,000 loan, after 10 years, you've got to pay back £4,000. You've got to work at a job to pay this back. If you haven't taken out this loan to buy a pair of shoes, it means you could retire earlier. You could save that time. It means you don't have to go to work that day on a grey Monday morning. You can go and visit your friends, you go visit your family, you go start a hobby that you've always wanted to do, travel the world. So, and it's going to bring you happiness. Not having this debt burden is going to bring you massive peace of mind, going to bring you massive, reduce your anxiety and stress. And yes, hopefully it's bringing you happiness. So it's going to help you escape the rat race. So I was in the rat race 10 years, and you think it's, chasing the corporate world, and you realize that your boss isn't your friend. He's just in the rat race the same. He's racing against you as well. So yeah, if you can get out the rat race quicker, then that's going to save you so much time, stress, and money. So yeah, we talked about what is debt. So essentially, credit card companies are making billions of pounds from you borrowing money and paying high interest rates on this. In historically, this was illegal. They call it usury, where a lot of cities or a lot of countries banned high interest loans. So it's a moral issue. It's not. So don't feel stressed and worried about. If you can, it's everyone's in the same boat at the moment. It's this capitalist model that we're following, that people can give you loans, encourage you to borrow money, and then pay back crazy amounts of debt. This is, it's an epidemic that we're facing as a nation. 70 billion pounds the UK have in credit card debt, which is insane. So advertisers are encouraging you to buy more stuff that you don't need, that you don't really need. This kind of comparison mindset. Comparison is the thief of joy. If you're comparing your car with another car, it's a lose-lose situation. You're gonna get into this kind of comparison mindset, and it's gonna eat into you. It's not gonna make you happy. And this is the ultimate goal of this channel, is to bring money in your pocket, time in your day, and happiness in your life. So yeah, people are taking on debt they can't afford to pay back. So especially this, I cover a lot in chapter 3 of my book. If you can get past credit card, then if you can get past this debt, then everything gets easier. I promise you, everything gets easier after this. Credit card debt is one of the hardest things to get through. So yeah, people are paying that they can't afford, buying new cars, holidays, new shoes, tasty lunches that taste good in the moment, but if you think long term, this is going to lead to a bitterness in your mouth. So yeah, credit cards don't seem real. It's this piece of plastic you just tap, and it doesn't seem real until you get the credit card bill in your hand, this tangible thing, seeing how much you spend. And it's easier said than done. I fall into the same traps as everyone else. I'm a human, and it's a human tendency to want the tasty treat initially and not think, what is this going to do to me 10 years in 10 years time? It's going to cause £7,000 rather than the £1,000 that you could have saved up to pay. So yeah, and then we went through the 7 methods. So assess your debt. Don't put it off. It's easy to ignore. It's not going away. Areas to reduce your spending. Look at direct debits. Look at how much you're spending. Are you buying luxuries? Can you be buying the same thing secondhand? All these things we talked about in other videos, how to save money. So number 3, understand compound interest. As we use this worked example, it's the most powerful force in the world, in the universe. If you can use compound interest for you rather than against you, then you're going to be winning in life. So pick your method: snowball method, avalanche method. We talked about the pluses and minuses. I think the avalanche method is better. It's mathematically more probable to get to your end goal, whereas the snowball method, pick the smallest debt and pick that. It's a psychological trick that pick the smallest thing, and then you're going to find that easier. And then increase repayments. Can you get a pay rise? Can you change jobs and get paid more? Can you get a side hustle? Can you get a raise? These things you should be asking yourself, and you should be asking your boss. And yeah, don't take on any more debt. To reduce your credit cards, don't take any more debt. So this has been Millennial Money Mindset. If you want the fruits, you need the roots. So I am founder of Money Tips. I'm the author of Millennial Money Mindset. This whole load of wealth in this book. It's a book about wealth, death and happiness and how we've lost our connection with nature. It was shortlisted by the Financial Times in 2017, and it was Amazon bestseller 2018. I think it's the best guide to becoming financial independence out there. It's going to put more money in your pocket, more time in your day, more happiness in your life. It's £15. It's an investment in yourself. How much are you paying for a financial advisor? You pay tens of thousands of pounds for a financial advisor. You're paying tens of thousands. You pay £9,000 to get a university degree every year. £15, it's a bargain. So buy that. I've got a course. I link the course down below me. It's for the price of a pizza. Come and join the membership. We've got a membership that is £1 a month for an annual membership. This is going to save you joining, saving, and it's going to be with a like-minded group of people. You're going to get financial education, financial literacy. You're going to get tools and techniques to put money in your pocket, time in your day, and happiness in your life. Or I do one-to-ones. I work with one-to-one clients, and we have a 6-month window, and we have a 6-week program that's £700, and it's aiming to an ISA maximizer. So we're aiming to start your first investment. We go through what difference between investing, what difference between trading. We've got all the best FCA regulated investing platforms. We've got a menu of the best platforms out there. We've got the worst platforms to avoid. We put together a financial plan, and we give you the tools, the techniques, and they give you the tips to get more money in your pocket, more time in your day, more happiness in your life. Hopefully this has been helpful. If this has been helpful, please like, please subscribe, please tell a friend, please forward this link to a friend if this has been helpful. I am Neil Doig, founder of Money Tips. You can find our website, moneytips.org. Tips is spelled with 2 P's. We give you money tips. We ask for tips if this has been useful. I have a Patreon account, and TIPS stands for tax, investment, property, pension, savings. And this is our website. There's a wealth of information out there on our website, in our members area, and on this Millennial Money Mindset YouTube channel and Millennial Money Mindset podcast. I'm also live on TikTok on Money Tips. So thank so much for joining us, and please be in touch. Please comment, please like, and please tell a friend.